Hello and welcome to another edition of Investing for Generations. Today I want to give you an update on my portfolio because yesterday I bought another stock into my portfolio. And also I want to give you an insight on my current portfolio and look at the performance. So let's go. But before we start, don't forget to subscribe, like, share and comment. Thank you. So today I want to talk about the newest member of my portfolio because yesterday I bought a position in Intel, the semiconductor and CPO giant. And in this video I will explain why I think it could be a good long-term investment right now, and therefore I will go through the history of Intel, take a deeper look into the financial numbers at the current price of course, and then come to a conclusion why I think Intel right now for me is a very good investment. Intel was founded in 1968 and is a number 13 on the Forbes list of the most valuable brands in the world. The company have around 110,000 employees and a yearly revenue of around $75 billion. It is also the second largest semiconductor company in the world by revenue, just behind and far behind Samsung. The biggest opponent in the CPO market of Intel is AMD, and here we can see that the market shares of AMD and Intel in the main markets, China and US, are almost equal. And on the next chart we can see that Intel had a big advantage in the past, but this advantage gets thinner and thinner. So that's not a good sign for Intel, of course, and it looks like they have a kind of an innovation problem. So this is one thing we have to keep in mind, of course, if we analyze this business. Then dive deeper into the financial numbers of Intel. Intel pays a nice dividend of 2.61% with a very low payout ratio and a nice 5-year growth rate of 6.96%. And even more important, Intel is still growing. They just published Q2 earnings and this showed a revenue growth of 20%, which is very nice for a very big company like Intel. And also when we look at the growth over the last 5 years, it's also a very nice picture. The growth rate over the last 5 years is around 6.5% per year. And it looks like this growth will slow down a little bit, but also for the next 5 years per Yahoo Finance, they will grow another 9% per year, which is a very good number for a big company like Intel. Then take a look at the margins. The operating margin is very high of over 33%, and with that Intel is higher than 97% of all the companies in the semiconductor industry. And also the net margin with almost 30% is very high, and also here they are one of the top companies in the sector. They also have a very good and high free cash flow. This is really a nice picture. The cash flow is just growing all the time, so Intel looks like a very nice cash machine. Then take a look at the balance sheet of Intel. The debt equity ratio right now is at 0.48. That's a very low number and a sign for a very solid company. But of course maybe you could be a little bit worried about the growing long-term debt lately. But with this insane low interest rates right now and the debt equity ratio of 0.48, you don't have to worry too much about that. And also the current ratio looks very stable with a little bit under 2. And really amazing is a long-term picture of the shareholder equity. This is a dream for every investor, and the shareholder equity is just growing and growing. So at all, we can see that Intel is a cash machine with a very solid balance sheet in a still growing market. So the question is the delay of the 7nm processor really a big deal as the market reacted yesterday? I think that's the question for the future. For me, it looks like on the long run, it's not that big of a deal. Then take a look at the management of Intel. The current CEO of Intel is Bob Swan. He took over in January 2019 and is in the company since 2016. So that's not so long, but even then, let's take a look at the stock price under his regime. When Mr. Swan started in January 2019, the stock price was around $47. And now after the drop from yesterday, it's around $50. So this is almost where he started. And of course, that's not a very nice picture. And also the delay of the 7nm processor don't throw a very nice light on the management and especially on the CEO. But hopefully in the long run, everything will be fine and he can fix these problems. Then take a look at the price. As I said, currently Intel is traded a little bit over $50 after yesterday's drop of over 16%, and that's really massive for a big company like Intel. So the question is this a good price to buy? To answer this question, as always, I try to find the intrinsic value of Intel, and therefore we take a look at my spreadsheet for that. So the growth rate, as per Yahoo Finance, will be around 9%. My discount rate or my expected return is 12%. The terminal growth rate is 6%. So the terminal growth rate, as we make a calculation for the next 20 years, is for the second 10 years. So the years from 11 to 20. And this will be 6% in this calculation. And I think this calculation is very conservative. So with the current earnings per share over the last 12 months, $5.44, we come to a fair value of $78. My buy price yesterday was $50.73. Therefore, my margin of safety to the fair value is 35%. That's really a nice margin of safety for a great business like Intel. I'm very happy I got the chance to buy Intel for that price. But of course, it's absolutely possible that they will drop even more. And if they do so and reach the margin of safety of 50%, I will buy even more of this great business. So what's my conclusion then? Intel has still a very good market position with a very high market shares in a still growing market. And they also have a great business model, as you can see at the very high margins and the great free cash flow. Of course, the delay of the 7nm processor is a really bad and hurts a lot. And of course, it looks like they have an innovation problem in the company. And they have to fix this, and they have to fix this hopefully soon. But after all, I think the drop yesterday was a real good chance to get a great company for a reasonable price, because I think the delay of the processor is red noise at the moment, but it's not that big deal in the long run. Or to say it with the words of Mr. Buffett, the market is a device for transferring money from the impatient to the patient. And it looks like the market get impatient yesterday with Intel, but I'm very patient and hopefully this will pay out. Then take a deeper look into my portfolio. So you can see I bought yesterday Intel for $50.73, and also my other stocks still performing very well. So this looks not so bad. And if we take a look at the proportion of my portfolio, you can see that Intel is just a small position right now with only 2.26% of the portfolio. But as I said before, if they will drop even more, I will add more and more. And you can also see that I still also have some cash in hand with almost 15% of cash. I feel also very comfortable right now. Then also take a look at the performance of my portfolio. I started this North American portfolio at the 2nd of December 2019, and since then the performance is 19.19%, which is a current outperformance to the S&P 500 of around 16%. And this outperformance just gets bigger over time in small steps, but at least it gets bigger. And this really makes me happy. So I hope this will be just continue like that, and we will see how this works out. So that's it for today. If you liked the video, give me a big thumbs up, subscribe to my channel and ring the notification bell to never miss another video. And then we will see the next time with another analysis of another stock of my watch list. See you then. Take care. Bye bye.